Yuval Rooz is the co-founder and CEO of Digital Asset, a New York-based technology company which is behind Canton Network. Digital Asset Holdings is building next-generation cryptographically secure settlement and ledger services. The company is providing safe and efficient settlement of conventional and digital assets, as well as providing a digital ledger to create, issue, track, and transfer mainstream financial assets. Prior to starting Digital Assets, Yuval managed an electronic algorithmic trading desk at DRW. Before joining the DRW Group, the venture capital arm of the Chicago-based trading firm run by Don Wilson, co-founder of Digital Assets. So Yuval, great to have you here to Marcus on Chain for the Global Blockchain Business Council.
It's great to be here. Thank you.
So let's start with tokenization. That's really been a hot topic lately. I just heard the SEC chair, Paul Atkins, talking about his support for it and what he thought it could do. How do you see tokenization working and helping people?
Sure. So first of all, I think it's important to understand why is everybody excited about this. And, you know, we've seen in crypto markets that everything is moving 24/7. The reality, though, is that in crypto markets, everything is fully pledged, meaning there's no leverage, there's no collateral. You just trade with what you have. And we know the traditional markets are not like that. And if we want traditional markets to move to 24/7 or be more efficient, we need to be able to move collateral more efficiently. So one of the most exciting opportunities around tokenization is just the ability to move, collateral real time. So stable coins was a great step forward. You could move variation margin this way. But now, we've seen yesterday DTCC announce that they're going to put U.S. Treasuries on Canton, probably the most important collateral globally. And so that's just one aspect of tokenization. But it's also this idea that today we really can't use our assets for anything other than trading them. Like you cannot take your equity holdings and use it to guarantee a loan, for example, pretty seamlessly. So a lot of the excitement around tokenization is the ability to have more utility out of your assets beyond just being able to move them 24/7.
And as I understand it, it kind of democratizes finance too. Like people would be able to, say, invest in a little piece of a famous work of art. Maybe you don't have the millions to buy it. That you could tokenize things like that.
Yeah, you can, technically speaking, you can tokenize everything. I sometimes say to people, just because you tokenize something doesn't make it liquid. There is an element of tokenization that makes the servicing or managing of an asset significantly cheaper. And because you make it cheaper, then it democratizes the access because you could actually trade smaller and smaller increments of whatever asset it is.
Yeah.
At the end of the day, I think that people will still have these kind of assets that will have much more gravitational force around them. Tesla stock, SpaceX stocks. And yeah, maybe there will be new asset classes that just because it's easier and cheaper to trade them, will create some gravitational force.
Yes, we'll see. We'll see how it all shakes out. So now, why use distributed ledger technology to map business logic, reducing complexity, improving efficiency in areas like loans and derivatives and foreign exchange? So how much is that being used now? And what are the benefits and challenges to that?
Yeah, so the reason to use blockchain or distributed ledger technology is that it really forces everyone that interacts with the ledger to agree on what is the data model of an asset and what are the functionality that exists. And as a result of that, once you do a transaction on a distributed ledger, everybody agrees on the source of truth in real time. Where in traditional markets today, that takes, in best case scenario, hours. And in certain, broadly syndicated loans, it could take over a month to actually settle a transaction. So the real interesting feature of blockchain and distributed ledger technology is that now you could actually mobilize assets 24/7 in real time. And you can now add programmability to actually introduce those assets into different types of services. As I mentioned, pledge your Apple stock into secured loan. So you could go now and get a loan from someone by pledging your Apple security into it.
Now, part of the Canton Network is privacy. So how do you ensure that financial data remains confidential?
Yeah, so I don't know if we'll have time to go into all the technical details, but
Yeah.
maybe if we just take a step back, I think that what the crypto industry have shown very well over the last 10 years is that there's a lot of excitement and also a lot of opportunity by mobilizing assets in real time. Stablecoins is just a great example of what success can look like. The reality is that if we want large institutional adoption to come, large-scale institutions would not be comfortable with everybody seeing what are their positions. You know, my former employer, Citadel, would not be okay if everybody would see all of the trades they do on a daily basis, all of their collateral movements. A treasurer of a publicly traded company would not be okay if the whole world would see what are the payments that are taking place by this company, right? So for us, when we started building Canton, privacy was a must-have. And, you know, now the crypto industry have woken up over the last 6 months, and now suddenly privacy is one of the biggest things that everybody's working, and we've been very fortunate to think about it 10 years ago.
Okay. So you're kind of ahead of the game when it comes to that. Now, what novel operational risks in digital asset infrastructure or market structure does the Capital Markets Risk Mitigation Framework aims to address that existing regulatory or industry standards do not?
Yeah, so I think if I take a step back, like for example, a term we use in finance a lot is DVP, delivery versus payment.
Okay.
And it sounds like as if those two things happen instantaneously. They actually don't. Those things happen on different rails, and sometimes the delivery will happen, but the payment did not happen, or the payment happened and the delivery, and that's what we call settlement risk or settlement fails, and it happens daily. Right. So the opportunity with blockchain technology is really to reduce all of this settlement risk. And we're seeing that already in many different applications that are being built both on Canton, but in many cases also on other networks.
Now, how does RMF translate risk categories like operational, legal, government risk into practical decision-making tools for regulated capital market participants like banks, asset managers, market infrastructure providers?
Yeah, so I think that one of the things that we're trying to do is really take existing frameworks. You know, the Basel Committee has rules around like how do you need to capitalize. And what we're trying to do is we're trying to show that with this new technology, you're not doing anything new. You're actually just accepting same frameworks. But the reality is because this is new technology, people are going to, for the next few years, look at the characteristics. Do you have privacy? What are the downtime, uptime of these networks? What happens if something bad were to happen? What are the emergency procedures? And I think very similar to the internet for the next, 5 to 10 years, we're going to see some additional frameworks being created to measure the risk associated with using this new technology. But after time, we're going to fold back to really just saying we have the same frameworks of what type of collateral, how much we need to capitalize our balance sheet, but the technology will just be assumed to be working.
And then why is it important for Canton Foundation and Digital Asset to collaborate with the Global Blockchain Business Council, GBBC, and engage with other industry reps in this initiative? And how is it critical to the credibility and adoption of the capital market-focused RMF, particularly across jurisdictions with differing regulatory expectations?
Yeah, sure. So first of all, big shout out for GBBC. I'm a board member there, and Sandra built an incredible team. But I mean, the thesis, again, of this industry is that we're trying to bring a lot of organizations, industries, governments to kind of work together on a common protocol.
Yeah.
And although the technology is capable of doing that, if I define, for example, a bond in the US one way and a bond gets defined, let's say, in Europe a different way, well, it doesn't matter that the technology can allow to interact seamlessly. From the technology perspective, these are two very different things. So one of the things that GBBC does very well is to try to create global standards of how do we define financial instruments, how do we define all kinds of interactions, and then also the risk framework of how should we evaluate the risks associated with this technology. So really what GBBC is trying to do is to harmonize as much as possible. The reality is we're not going to have full harmonization across legal entities, legal jurisdictions and countries, but try to bring education and knowledge across these different sectors. And for us as digital asset and Canton Network, again, we want to be part of a global world. And that's why we love to collaborate with.
Sure, and you're kind of on the ground floor here to really, write the definitions and the standards of this industry that's growing, actually. So, yeah. Looking ahead, so how do you see the RMF evolving as tokenization on public blockchains move from pilot projects to a more of a systematically relevant scale?
Yeah, so I think it's similar to what I said before, which is in the next 5 to 10 years, we're going to see more and more people use this technology. We're going to have to think about what are the risks associated with this technology. We're going to have to write procedures, no different than how we think about cyber risk today with the internet. So this technology will have elements that would be unique to this technology, and those risk frameworks, will improve over time and will, be inserted into financial institution operational playbooks, right? And over time, this technology, again, will become just like the internet, which we just accept it. And these risk frameworks, again, over time will change less and less and less, and will just become part of our business as usual procedures.
So just kind of a final thought. I mean, how do you see blockchain technology working its way through society, like the end user? What will it mean for them?
I think that today we don't think about the fact that we use HTTPS or TCP/IP or whatnot. We don't think that we use now tap with a phone, even though it's not that old, right? We just accept these technologies. So today there's quite a lot of fascination. What is the consensus? What is, how do you do certain things from a technical perspective? Even you asked in this interview, like how, so there's fascination because it's new. It's allowing to do things that we haven't been able to do. I think what we will see is that stable coins and different on-chain payments will become a thing of regular use. That my hope is that if you and I do an interview in, a few years, we're going to talk about what is quote unquote the Google or the Meta or the OpenAI on blockchain. We're not just going to talk about blockchain. We're talking about the use cases and the businesses that are driving, but we're no longer going to talk about blockchain anymore. We're just going to accept that that's just an infrastructure that mobilizes assets for us.
Yeah. Okay. Well, it's fascinating to learn about this over the past few years. So Yuval, thank you so much for coming and sharing your insights.
Thank you.